Welcome to the third episode. This is the third episode. We are still analyzing now the downfall. We want now to we go deep down into the details. We want to see how you can enter a trade that you missed. You want to see now how you can enter a trade that you missed, based on time and price. Nothing else. Based on time and price and yourself now. Yourself now. Ni watu watatu sahi, mko price, mko na time, na wewe mwenyewe akili yako. So these are new. This one is a new 4-hour candlestick. This one, a 16 o'clock candlestick. It's just when it has opened. You know, we are learning this thing real time. This is real time. We are doing it real time over here with Sami, and we will be doing some more videos like this one. I know these videos are fire. You don't have to tell me. You don't have to tell us that it's fire, because already the information we know. We are working with the information, so we are just breaking the secrets of the universe. So when we meet the information, don't feel like we are losing too much by giving you this information. In fact, we are losing nothing. It's only that we want now it's not that we are doing it because we want anything from you. In fact, we don't want anything from you. We just want to help you also, to get this kind of information and make decisions based on now your own unique experiences, while you start now backtesting and journaling on your own charts without us being present. So okay, so this is our new 4-hour opening price, Kaka, and this is the daily opening price. This was the 50% of the bigger dealing range. So all this price, all these technical approaches are just there to guide you on what to expect on the marketplace, because it's only your expectations, your emotions, and your expectations, that do determine how you can progress here. Because it's just human instincts, your emotional capacity, your willingness to risk, and your willingness to take a risk to pay that thing. So this is the first 2 hours. You can go with us, because I've been telling us that the opening prices, daily opening prices, the 4-hour opening prices, the 2-hour opening prices, the 1-hour opening prices, 30 minutes opening prices, those levels are very, very technical. Those levels are the highly resistance and highly supportive areas you'll never find on your charts. And they bring about a lot of things, like an edge. They can give you an edge. Just the opening prices alone, they can tell you why to sell and why not to sell, and why not to buy and why to buy. You get it? So you can see we take out sellside liquidity over here, intimidated people to the upside to collect the stops, because the market is currently going for money. It's going where money is. It's not moving to the way you are expecting or what you want. It's moving where money is. So our work here as now traders is to take part of those movements. To take part in those movements. So these are so during the first hour, the market was downside, was selling. Then after our 17 o'clock candlestick opened, the one that I'm delineating over here, this one, it simply ran sell side, then ran buy side again, finding resistance on the daily opening price. So these kinds of things, when they happen in the marketplace, they are giving you signals. Now these are the signals that people do talk about, and they happen within minutes, within seconds. So your mind should also be able to interpret variables and take action immediately. Because if you just wait or waste time or doubt yourself, it becomes difficult for you to manifest anything out of this place. Very difficult. So I just it's advisable to enter the marketplace during the second hour of trading, as we have been preaching. And I want Kaka now to give us the analogy of what happened here. This is now their money making machine. I want just to expand. Yeah, we'll close the video. This is the last episode so far. Yeah. This is the last episode of our. These are 3 videos. Like imagine hizi video tatu tumetengeneza zinaweza kusaidia jeni yako ya FX tu kuanza peke yake. Yeah. Ama kaka tunasema uongo.
Hapana. Kweli kwanza for a start.
Yeah. Iko poa.
Yeah. So what you can see happening here, you can see there was a lot of liquidity lying above this zone, below this zone, and this zone was the daily open. Yeah. So after price,
or you can just write there the daily open. Maybe they are not seeing.
Yeah.
Let me just write there the daily open. Yeah, some people, unless you hit their head or you pinch them a little bit, then it will become difficult to help. Very difficult. That's the daily opening price. Yes, you can continue.
So
continue with this one.
Yes. Yeah. Okay, you can see there is a lot. This zone. Remember, during this particular time in place, the price was trading around this zone. Let's assume the price was here. Okay, that's when you entered and observed the charts. But we can see there is liquidity line below the daily open.
Above or below?
Below.
Oh, okay.
Yeah. Below the daily open, and liquidity is the fuel of the market. So if I thought the market was to continue trending downwards, the market will come to look for the fuel before the market continues with its momentum. And a daily open is a very important support zone. On this extreme, there is a swing high, which obviously there was a lot of stops around this zone, and supply zone. There was a supply zone over here, an open supply zone, and below liquidity below an open supply zone. That's it makes that zone to be a stronger. It acts as a stronger confluence. So after price, you can see that at this point you can see price it tapped around this. On a higher time frame, this is a like, let's say a 15 minutes time frame. This is a supply zone, just a buyer before sell down. So after the market tapping into this zone, you can see the market breaking the swing low that had formed below this zone. This happening validates our setup. After price moving this, it formed a gap. You can observe there is a gap around this zone. You can highlight kindly the gap.
I just want to also use a Fibo so that you can be able to identify the regions that will be placed. You know, this is an ATM machine.
Yeah.
The one that we are presenting to you here.
Yeah.
So this is the fair value gap that we're talking about, or which gap are we talking about?
Yeah, that's the fair value gap.
This is the fair value gap. For those who don't know maybe the meaning of fair value gap, it means a fair value gap.
Yeah. And considering the price level, these mathematical models like Fibonacci are very vital sometimes that can help you interpret the price action, even for at a beginner level. It is very friendly, and the concept around it is just the same.
Okay, can you people see how beautiful this thing is looking before you right now? Or am I the only person who is seeing? Because you know, these things, you will have to also use the power of association. There is something that is called the power of association. The power of association works when you associate your mind with this things through the back test.
Yeah.
So you are associating the mind, you are making the mind to accept them as the truth.
Yeah.
And for you to be doing that, you will have to compile data and collect the things that are repetitive.
Yeah.
You see?
Yeah.
So when you have a large amount of data to work with, then that means you will have a lot of how do you define
That's
many
where
things.
an edge develops when you have a lot of data.
Yes.
Let's just say for traders, that's how it works.
That's how it works.
Yeah. The edge develops. You need to have an edge, and your edge will develop when you have a lot of data that you have back tested, and that will support your reasoning behind the charts. Yeah.
So this was a live trade. This is a live trade, and this is the problem of selling at the premium, at the discount side of the marketplace. You can easily be shaken out. Like for example here, it's advisable to enter the marketplace after the 2-hour opening price. This one that I'm seeing, this horizontal dashed line over here, these are at 2-hour opening price. This one, sorry, is there some water over there? Okay, this is a 2-hour opening price. The 2-hour opening. There was 3 minutes remaining, that's why we are faster. So this is the 2-hour opening price. And remember, our machine had already played out. The stop loss should be placed at 25% of the upper quadrant. You know, these lessons are very technical, and for you to be able to get anything from what we are teaching or what we are discussing, you will also have to repeat these videos over and over again. For the mind to start now seeing, because you know, so currently you're just seeing some candlesticks and you're wondering, what are these guys talking about? What are these guys talking about? Because you basically don't know what's going on. But this is a business. This is money moving. So this is money moving. So if you come here thinking like you have come to play a game, then we are very sorry. Maybe you are in a wrong profession, or you are in the wrong side, or you are in our own offside. You'll have to find yourself first before you can even come here and try pulling triggers. Very technical business. So this is where the stop loss is. A stop loss is an important also price level on your charts, because it will prevent you from making a consistent amount of losses.
Yeah. It's a way of risk management, let's say.
Yes. So that's where we place the stop loss. We place the stop loss here. We just want you to see, because failure other people cannot be able to see. This industry is testing our level of cautiousness. Stop loss. Where's the stop loss? Nikimaliza hiyo tunafunga. Nikimaliza tu hapo. Take profit. Tueleza tu hapo hivi tu. Take profit sasa ni 161.8. You pay yourself, because your price retraces back to the fair value gap. The fair value gap is usually at the equilibrium price level. The previous price level 2 minutes. Alafu sasa unacheki resistance kwa 2-hour opening price. That's why hizi ma levels kama kama uja mark kwa hizi ma charts, hizi ma level. Re-entry nyingine ndio hii hapa tena kwa hii FVG. Penye nikakuja kaguza hapa. Ndio hii ka retrace tena, ile poor entry, but we trusted the process. Because we knew what we are doing. You get it? So this is the resistance, the 2-hour opening. You can see the resistance. Malizia like
even this. Okay, to add on something, just this point, there is a concept here